Hello, everyone. Welcome. Would like to invite you to the panel that we're going to start now called Impact Trends to Invest in. Obviously, the impact space is growing leaps and bounds around the world. So it's going to be a really interesting panel today because we're going to talk with some investors about getting to get their thoughts in terms of what they're seeing in markets in Europe and also around the world around impact themes. So we have today two great panelists to start off with. Firstly, we have Sophie Cucheval from Miimosa with us. Hi, Sophie. Thanks so much for joining. And we also have Agate Freimane from Norrsken VC. Thanks so much for joining us today. Great. So I don't want to take up too much time. I'd like for us to just jump right into it. So both of you are obviously working active in the impact space. You have very different platforms and types of investment vehicles, I say, to kind of invest in different investment startups around the world. Impact startups around the world, rather. So I'd like to start first with Agate to talk a little bit about Norrsken VC, and maybe you could introduce Norrsken for everyone, and also talk a little bit about what you're investing in. What are the things that are exciting you that you're seeing at the moment as an investor?
Of course, thank you so much. So our roots started, Norrsken VC was born out of Norrsken Foundation, which was started just over 4 years ago by one of the co-founders of Klarna. And everything that we do at Norrsken is because of the core belief that we fundamentally believe that entrepreneurs are our best bet to solve some of the world's most pressing challenges. So everything that the Norrsken Foundation and the Norrsken ecosystem does is about enabling these superstar entrepreneurs. And on the VC side, we are today a 123 million euro fund, and we are actively investing in very early stage impact tech startups that are addressing some of the world's most pressing challenges. And as an investor, we're sort of impact vertical agnostic. We will invest across all of the UN SDGs. Having said that, of course, there are a number of themes that are kind of front running in our portfolio so far. And you know, if I get a chance to just highlight 3 of those, then for instance, some of our biggest themes today have been electrification, from investing in electric trucks, electric airplanes, battery software that makes can make the whole space more sustainable. As one example, food waste. We see opportunities across the whole food supply chain system, from how to grow food more sustainably and efficiently to how to eliminate waste across different parts of the value chain. And then a recent emerging one that's also a huge problem that startups are so well placed to address is actually the fashion industry, from traceability to innovative materials to better production lines and systems to eliminate waste. So a huge playing field for us as an impact investor.
That's great. And in terms of where you're investing at the moment, principally in Europe, any other regions you're looking at?
Yeah, so predominantly in Europe. We're a Stockholm-based fund, but we invest across all of the Europe, and we can go also outside Europe, but we really feel that we are special. We have a special edge being in the European region.
Okay, great. Thanks so much, Agate. I'd like to switch gears a little bit and speak with Sophie, who has a very different approach at Miimosa to make sure that we get money and funds into another very important key impact sector. So Sophie, can you talk a little bit about what you're doing at Miimosa?
Yes, thank you for inviting Miimosa to speak. This is a great opportunity for us to remind how important agriculture is regarding the main challenges we face. In fact, at Miimosa, we are convinced that the agricultural transition is the key to meet the global challenges of food insecurity, conservation of the environment, climate change, health, and energy security. In fact, we know that agriculture is responsible for 30% of our greenhouse gas emissions, for the loss of natural resources or biodiversity. But at the same time, we know that farmers are able to store carbon in the soils, to produce renewable energy, and to regenerate biodiversity. So today farmers have to be innovative, resilient, and above all, we think at Miimosa that they need money. They need money to face the economic transition, for instance, the growth in the farm size, the development of activities outside agriculture, and the diversification of production. And they need money to face the social transition. For instance, 1 in 2 farmers who now establishes is not from a farming background. And they need money to face the ecological transition. I can give you an example for that. For instance, when a farmer shifts to organic farming, his production costs will be higher from the first year, but he won't sell his products at a better price before the 3rd year, before his farm will be certified as organic. So he has 2 or 3 years which will be difficult. Maybe another example about this ecological transition, we ask many things to farmers. We ask them to shift toward regenerative agriculture, but at the same time, we ask them to increase food production by 50% to feed a growing world population. So one of the main challenges is to support them in this transition. And we think at Miimosa that finance is the most powerful tool we have to do it. In fact, farmers' financing needs have increased by more than 100% in the last 10 years. And existing fundings are not always relevant. Banks, for instance, fail at innovation or they face strong regulatory pressures. So that's why Florian Breton launched Miimosa in 2015. We are a funding platform dedicated to food and agriculture sustainable transition, and we allow farmers, producers, and entrepreneurs to accomplish their projects. So for that, we have developed 2 financial tools, donation with rewards and participative loan, which is crowd lending. And in the last 6 years, we have supported 4,000 projects in France and in Belgium, and we have collected 50 million euros.
Wow, and I think it's interesting that you have that dual financing, those 2 options. Is there one that tends to be a little more popular than the other, or is it, are both equally interesting for, I guess, for those in the agricultural sector as well as for investors, which is actually the public?
Yeah, they are both popular for citizens and for companies.
Okay, very interesting. Okay, now I want to switch gears a little bit and talk about the impact sector and how it's growing, because we're seeing some pretty significant growth, particularly in Europe, but in many other regions around the world, around this concept of impact investing that we call it. And I know, Agate, when I spoke with you before this, you define yourselves as an impact investor, as I understand. And, Miimosa is absolutely working in a space where they're really focusing on impact and delivering impact in the agricultural sector and also for participants in that sector. So I'm curious as to what you're doing to kind of work with others that are now coming into this space. So whether it be corporations or it be more traditional VC funds or even other financiers that are now seeing these spaces that you've talked about is very interesting opportunities.
Yeah.
So sorry, Sophie or Agate.
Yeah, I'll jump in, but I can say, generally the whole space of impact investing, it's just, phenomenal how quickly the whole space has grown. It has grown a lot faster than any of us could have expected when we started to invest 4 years ago. At the same time, one is that we're still kind of calling, and maybe that's not wrong, we're still segmenting everything impact investing, but there are a lot of different kind of pockets of impact investing, from all the way from philanthropy to where you would sacrifice some financial returns to truly market rate impact investing. sort of we as an investor, we from day one really wanted to sit at the spectrum where you're combining this uncompromising impact first mentality and approach to investing, but at the same time also this top tier VC mentality, which is striving for the best returns in the market. And not saying that that's the only way how to do it, but it's still that we all need to kind of do quite a lot of explaining on which part of the segment we sit. But having said that, you know, the market has evolved really quickly. When we started to operate in our niche 4 years ago, we still found ourselves in every single meeting sort of explaining that yes, you can combine impact and financial returns, but it wasn't a naturally accepted position to sit in the market. But we realized that the market has matured really quickly, and today when we say that, you know, we're striving for market rate returns while generating impact, people are much more kind of, you know, take that message at the face value, say, okay, we got it, we know exactly what you do. And it's just, you know, great to see that the market is getting a lot smarter about the different types of impact investing. And of course, I think here on the panel today, we're probably also two different types of capital.
Absolutely. And Sophie, I know we talked a little bit about the many partnerships that Miimosa does. Can you tell us a little bit about those?
Yeah, sure. I think we are all concerned about agriculture. So we like to say at Miimosa that we are connected with farmers 3 times a day, at breakfast, at lunch, and at dinner, and we don't even realize it. So our goal at Miimosa is to reconnect citizens with farmers through crowdfunding. And I think it's quite interesting because the crowdfunding market size has a huge potential to grow, especially in Europe and in France. And agriculture is the most dynamic sector of crowdfunding. I think there is 2 main reasons for that. First, because of the increasing needs of farmers. And second reason, because this is one of the safer sectors with very little default rates. For instance, it's about 3% in agriculture compared to 6% for companies in general. And we don't really know that about agriculture. So that's why we think at Miimosa that investing in agriculture is not only a matter for experts. So we work with many companies and citizens which give power back to their money and have a positive impact on agriculture, on society, and on our planet. So maybe to give you some examples, first we work with many companies to develop sustainable business models and to embody their commitments to accelerate the transition towards sustainable agriculture and food. For instance, we work with Danone's dairy farmers who reduce their carbon footprint. And so Danone's carbon footprint, we implement regenerative agriculture and we enhance the image of farming. And Danone co-funds those projects with consumers on our platform, on Miimosa. Another example, we work with Carrefour in France and in Belgium. And Carrefour invests the group's cash position in its suppliers project. And it's really interesting because it's a way of securing its supplies and of generating attractive returns with interest rates between 2 and 7%. Then we invite citizens to empower their money. I think we offer an easy way to increase their savings and to take action for a sustainable future. Because with crowdfunding, they can finance the real economy with better rates of return compared to traditional saving. For instance, in France, I'll give an example for France, you get less than 1% of return with regulated saving. And finally, we work with investors as well, such as Quadia or Alter Equity, they have chosen to support agriculture through companies like Miimosa. And I think they're not specialized in agriculture, they are specialized in impact investing, but they share our vision of the role, the importance of agriculture in contributing to a better future.
Great. And actually, when we spoke, you talked about, oh, go ahead. Sorry, Gath, please.
No, but just maybe just to build on Sophie, I mean, it's just also to your earlier question about partnerships and collaborations. I mean, it's just fantastic to see that the timing has never been stronger, and we really see this push from all stakeholders across the spectrum, you know, to sort of play their role in this what you can achieve with impact investing and to really combat some of the global challenges, and it really transcends across. It's from us as society to start with. You know, one concrete example is that it's great to see that talent wants to work for impact companies, impact projects, anything to do with that space. Investors are, you know, increasingly looking for how can I actually deploy my money for good, and that, you know, so you had great examples of crowdfunding. We see that on the fund side, that there has been huge rise in demand from limited partners, pension fund investors, traditional institutional investors. And just last thing to add, like one thing that I really personally like as a VC investor, you know, VC is probably seen as naturally quite, you know, can be a competitive space where, you know, you kind of, you know, the stereotypes of the industry is that you need the sharp elbows, but that doesn't really apply to the impact space. Like, I feel that even the impact funds out there on the VC side, they're collaborating, willing to share deal flow, willing to share, you know, how to measure impact, how to report on impact, and we generally find a really positive momentum across the spectrum.
And actually, one of the things that I've observed is that over the last, you know, I guess now we're more than a year since the start of the pandemic, this space has actually accelerated. And I know, Sophie, we spoke a little bit about this. I'm curious as to what you're seeing. Are you seeing much more demand for impact, I guess you could say, and finding business models that kind of drive impact since we started living with COVID-19?
Yes, sure. We saw that everyone wanted to help farmers and to be part of the solution, especially last year. Yes.
I don't know if I would put it down to COVID. I think, you know, COVID generally forced all of us to kind of dig deeper and look deeper, kind of what's going on in the state of the world. But I think sort of the momentum around impact investing, climate challenges, etc. Like, I feel that momentum has been building now for some time, and I don't know whether COVID has or has not accelerated that. I sort of feel that it would have happened with or without COVID, that us as a society, we had reached a maturity level where it's sort of, okay, enough talk, now we need to start to act, and you know, we need to put something concrete out in the world to start to address it.
Okay, and we're actually coming up on the end of our time. I would love to hear from each of you just very quickly, just, you know, the last kind of thoughts on where you think this space is going. What do you see is going to happen in the next few years?
I mean, I honestly think that impact investing as a whole is one of the biggest business trends of our time. You know, it's the same way as smartphone completely reshaped industries. In the same way, impact investing is kind of redefining everything, and the momentum will just keep accelerating. And as I said, it already happened a lot faster than we could have expected over the last couple of years, but I feel that it's just a sector that's going to keep growing exponentially, which is really great news for all of us.
Great. Sophie, last word to you.
Yes, I think the COVID pandemic has created new opportunities for impact investing, as people have looked for the means to act, you know, and to help farmers in particular, but people in general. So I think we have the responsibility of keep on accelerating that movement.
Absolutely. Thank you so much to both of you. We're going to move on to our next panel now. It was wonderful talking to you and kind of hearing your thoughts on where things are going in this very exciting sector. Thank you.
Thank you so much for having me.
Thank you.
Yeah, of course. Thank you.
Bye.
Bye. So up next, we have another very exciting short panel for you. We have 3 investors joining us this time. First, we have Hampus Jakobsson from Pale Blue Dots. Next, we have Douglas Hansen-Luke from Future Planet Capital, and Marc Menasé from Founders Future.
Hello, how are you?
Hello, how are you? I can hear you.
Great.
Oh, there you all are. Good to see you both.
Good to see you. Can you hear well?
Great. Yes, I hear all of you. I think, Hampus, we can't quite see you. There you are. Hello.
Hello, Hampus.
Welcome.
Hello.
Hello.
I've been waiting in an
Great. So we're
empty
gonna
meeting room for so long.
Okay, it's okay. Well, thank you so much for joining us today. It's great to see all of you all. We're going to continue our discussion. We started on the last panel talking about impact trends to invest in. We're going to continue that discussion now. I would love to hear your thoughts on, as investors, what you're investing in at your funds. You have, bit different models. Some of you define yourselves as impact investors, others do not. So can we go first to whoever would like to go first? Maybe Hampus first? I think he's gone dark. Okay, maybe we can go with Marc first and he'll join us in a moment. Please, Marc.
Okay, thanks. So very happy to be here and introduce you what we're doing at Founders Future. So basically, I'm an entrepreneur. I started to invest on my own back in 2005 and as an angel. It happens that back in 2018, I thought it might be a great idea to try to accelerate a little bit what I was doing as an angel with a kind of super angel structure, combining operational support on one side and capital. As it takes a very long time to create companies. So the idea is to create the best backbone at the beginning of the journey, helping all the entrepreneurs we are backing to do that. So initially we come from the take word. And I was very involved in the food industry. I backed a lot of companies and creating as entrepreneur food tech. So this is how I came to the point where we needed to build and back more respectful model, mostly around food, and it opened, I have to say, another bunch of areas where at some point, it's our responsibility, I think, as entrepreneur to invest our money and our time and our knowledge in more respectful business. So it took me probably several years, I have to say, to understand that this is what I like. This is what I wanted to do. I think also with my team, we came up to a point when we had a great ambition for this kind of business and those entrepreneurs. We had a first vehicle to do a seed investment in Europe of 60 million, 60, which was a decent size, probably one of the biggest one. And in order to be very legitimate, having the good people around the table internally, the right skills, we are now adding another 50, 60 million to specifically fund a more respectful project around 4 areas. The first one is still food, but more, I would say, the model of production. This is how we came to do one of our first deal in the vertical farming, a company called Jungle in France. The second one will be around delivery and packaging. The third one is a specific focus on circular economy, and the last one is health and well-being. So that's what we do, based in Paris, and we do invest everywhere in Europe, as we have about more than 60% of our money outside France, and we are very happy to be here today.
Great, thank you. Hampus, we'll go to you, and then we'll go to Douglas last. Go ahead, Hampus, please.
So briefly about us is like the thing is, so we're a climate tech fund. We only focus on climate. We're super early stages. We only lead deals. So we do from 250K up to roughly 2 million euro tickets. And we only focus on areas which we see essentially has three criteria. They have huge climate effects. So then you have all the big sectors: food, transportation, cement, steel, electricity, carbon removal, all those. Number two is that the customer should want it independent of the climate effects. So it can't be that this is a product that we'll only buy because we believe climate change is happening. And then I think the third part of it, and because we're an early stage venture fund, it needs to be a problem that you can throw money at it to accelerate it and decrease the timelines less than 10 years, because it doesn't really make sense for us to invest in something that will take 5 years to deploy, heavy capex, build factories and everything to get there, because it's not just fit for our kind of quote unquote asset class, even if that's a very boring word, but that's it. And so we typically don't do stuff which are heavy project financing, infrastructure, or requires massive legislative changes to actually do. Personally, I am super, super bullish about moving all transportation to electric. That's the thing I'm really into. Same thing with supply chain, just really understanding it, and supply chain transparency is something we've done quite a lot in. The third one is how to make all finance avoid fossil fuels. We call that category green finance. Still, massive amounts of your pension money and other things are actually now put in fossil fuel companies or meat companies and other things. The fourth one is modifying crops. We're very interested in looking at what we can do with existing crops and making them grow in harder climates. And then the fifth and last one is trying to find a business model that is in land preservation and biodiversity. Because currently we're in a strange world where you can make money by cutting down trees and planting new ones, which are actually not very good for climate, but you can't make any money on preserving forests. And to highlight these 5 areas that I'm very bullish about, it's the ones I'm very bullish about now. In the 28th of May, 2021, we have invested in 11 companies so far, anything from food to transportation to we do a lot of different things. As long as it's the 3 first criteria: big climate effects, it need a dependent climate, and that you can throw money in to scale it.
Yeah, the space is moving so quickly. I imagine the interesting opportunities change all the time. So, you have to obviously remain nimble. So on that point, Douglas, can you tell us a little bit about what you're doing at Future Planet Capital and what you see, what areas, what verticals do you invest in, and what you see some of the most interesting trends in the space?
So Future Planet invests in growth stage companies coming out of top universities from all over the world. We only invest in impact and innovation in companies that are going to make a difference to 1 billion people or solve challenges that create over $1 trillion of externalities. So for us, the climate change the verticals are climate change, education, health, security, and sustainable growth. And you've asked what's really exciting us at the moment. It's clearly climate change. Not only is it existential, there's no bigger impact than ensuring the survival of the planet. But also this year, the timing, the fact that we've got to a tipping point where everybody understands it, everybody wants to do something about it, and we actually have the climate change conference coming up in November here in Europe. So it's really important, we think, to actually move now and to take advantage. As investors, you want to get the timing right as well. So with Barclays Private Bank, we're launching our own climate change fund. And that is culminating in closing at the conference in Glasgow. And the areas that we're looking at within are 3 categories for climate change: energy and emissions. So again, electric vehicles, but also things like nuclear fusion. Very exciting, seeing the type of companies that are available on a global basis. The second we're looking at is sustainable consumption. So much of what we do is wasted. So much could be done in a more circular way. So we've got fashion companies that we're looking at, which is very exciting. We've put into our pipeline. And then the area that, for me personally, I'm really, really excited is food, agriculture, and ecodiversity. You talked about one specific example. It's probably seaweed. So the 2 biggest challenges for the climate are ammonia and methane. Ammonia because it leads to CO2 pollution, methane because it's 80 times worse for for global warming than CO2. And if you feed seaweed to livestock, it significantly reduces the methane. And potentially, we're looking at the science on this and have got 2 or 3 companies working on it. the ammonia that's leaching out and causing not only trouble to the environment through the greenhouse gases, but also to water sources. So these are the types of things that we're working on right now and are most excited about. It's a brilliant time to be doing it because I feel that all of us on this call are actually being able to make an impact in a very direct way.
Interesting. And actually, maybe we'll stay with you a moment, Douglas, on this next question. So there's a lot of new people coming into this space now. Obviously, the three of you have thought long and hard about impact, how we think about impact, how we measure it, how we assess it, how do we make sure that we're achieving the goals that we're setting out for ourselves. But there's many people coming in this space who don't necessarily have that same experience, right? Or even that same point of view. I'm curious as to how you kind of address that. How do you think that somebody coming new to this space can be successful, either as an investor or even as startups?
Sure. It's a huge space now. Everybody wants to go into it. And that's a good thing. You know, the more people that are putting their brain, putting their money to work to reduce global challenges, I think, and to address them, that's got to be a good thing. We're very strong, and this whole conference is about that, about aligning purpose with profit. There's nothing sustainable about a loss. So the most important advice to anyone entering this is don't go for greenwashing, don't go for making the world a better place, but not thinking through how you can actually use resources efficiently. And using resources efficiently includes using capital efficiently. It's people's pensions, their savings. Make sure that when you're investing, you're doing it in a way which is actually going to produce external good and impact, but it's also going to produce a profit which will allow whatever you're doing to continue the day after. To me, that's the biggest thing. If you're then looking at the measurement for impact, it's crucial to make sure you're working with other people who've been thinking about this a lot. So we began by consulting with APG and PGGM, the biggest pensions in Europe, who for decades have been looking at responsible investing and working with them to identify investable sectors within the UN Sustainable Development Goals. So there's the main objective, climate change, the sub-objective, and then investable sectors. If you can fit all of those, you're going to be impactful. If it's a good business, it will be impactful. And then when we exit a company, we work through the forensic analysis of what that exact impact is. But if you try to get all of that forensic analysis right for a venture company at the beginning, you'll never get any deals. You'll never make any impact at all. So we think there's a risk for people to spend too much time analyzing at the beginning when clearly so many of the things that we're doing are actually fairly obvious. You should move fast, get them, provided you're testing. It's within those categories, and it's going to be something which is profitable, so it can continue in the long term.
Absolutely. Marc, what are your thoughts on this particular topic?
I was demuting. Look, I mean, we made a very important job on that. Mostly, I would say, in two areas. One is assessing the real impact of the company. So we've been inspired by a lot of different models. We combine a lot of assessment tool in order to be sure that, I mean, we are investing in a proper impact company. But more than that, I think what is important is to follow, once you have made the investment, the trajectory of impact of the company. This is how we came up with a strong methodology around a software company created in France called ZEI, Z-E-I, which is basically a software company that will follow every move of methodology of the product, the production of a product, the company behavior, in order to assess in the time the improvements, the company and his impact and the improvements of that. So it's also a very, I would say, a collective way to work in between inside the company, but also as you have a ZEI profile, you can also publish this profile as you would completely do with the LinkedIn profile. And I think that's very interesting because at the time it's becoming more transparent to push the whole company in a very positive way to improve whatever it's through small things on the everyday base, or a more structural change in the model. So yeah, this is how we do, and today it's very powerful, and I count a lot on the improvement of the whole software and all the data we can the company we are investing in can provide in order to assess us the best way.
Very interesting. And Hampus, what are your thoughts on this?
So I'm going to repeat part of what Doug said, but I think that I can preamble that. What we really believe that all funds are impact funds, and just as all of the startups and investments are impacts, they do impact. And I think that I would love us all, like planetarily, to get to a place where we recognize that and see that. And because there are essentially like 4 different kinds of funds. There are we don't care and we don't filter, but we impact. We care, but we don't filter on impact. We avoid the worst, but we still impact, of course, with ones that are not super good. And then we have the last one, which we say only invest in things that we think drive good change. And I think the problem is that a lot of funds in the world are the first 2 categories. They don't care and they don't filter, and they're not considered impact funds naturally. But the thing is, they are. All of us are impact funds, and then some funds are striving to kind of select a certain criteria and stuff. And I think that we should remove that conversation. We should just say, every single fund is doing impact. Let's look at every single fund's impact. Let's look at every single startup's impact. But I think getting back to Doug's comments, and I think it's we very much invest in people. I mean, we're super early stage. It's a $100 million fund. I mean, we invest in that, and then we invest in pre-seed and seed, so that we can't quantify and measure everything because the companies are going to develop. You can't ask them to report on enormous amount of metrics. So at the end of the day, we really reinvest in people. But we really make sure that the people are what we kind of jokingly almost call climate first people. So it's very clear that they will not do anything which is going to make stuff worse. And then we have one company, for example, where when we asked them to look into sort of their impact, their negative impacts, and had a conversation with them, they reported that they use small plastic vials in a part of their production process. And we said, oh, okay, that might be an issue, or not. I don't know. How many plastic vials? And they reported that it was roughly 10 pounds, 20 kilos, or 5 kilos, sorry. No, sorry, 20 kilos of plastic vials per year. And we said, well, you don't need to kind of bring up that. That's okay. I think we will probably ruin more with our fund with takeaway lunches. And I think that's the problem when you ask founders to kind of alter report and everything, because then they go in and have a really bad conscience and they're really thinking they're doing wrong. And I think that if the 99% of the business is doing the right thing, then it's okay to take a takeout lunch in a styrofoam box. And I think that I'm really worried that we're putting the pressure on certain kind of people that are trying to do good, that they have to be perfect. And just look at teenage girls and how hard that problem creates.
Okay, great. Yeah, I think that the thing that's kind of interesting about that is that, I think it's finding that right balance, right? It seems, quite difficult to be able to kind of assess what, impact they're generating, as well as making sure they're a viable business as well, right? And then they kind of focus on that. I think that's a really important thing as well. And we're going to have to wrap up in a couple minutes. And I think just in closing, it would be great to hear from you all. Impact is obviously a big word, some very ambitious projects. Do you think that we're going to make it on topics like climate change or food security or improving agricultural systems?
Yes, absolutely. The solutions to most of the world's biggest problems are already here. And the world will invest and it will get to those positive outcomes. Whether we do it in time is another matter, but we will do it. And I'm very encouraged about where we are today. And ChangeNOW is just another example of that.
Great.
I think for me, I think that I 100% agree with what you said, Doug. I think my biggest headache is that humans have a very hard time changing their beliefs if they're paid to keep their current ones. So I think a very, very important thing is that we need to make sure that we don't incentivize bad behavior. So as long as we're paying companies and giving people bonuses that they produce more livestock or that they drill more oil or burn more fossil fuel, I think they won't change. They will continue doing what they're doing because they're paid to do so, even if they might feel bad about it. So I think we need to really remove that. I think that's really, really important. I totally agree with Doug. We have the solutions. We just now have to incentivize people to stop doing stupid stuff.
Yeah. Marc, final word to you.
No, I think I really agree with everything has been said. what I'm focusing on at Founders Future is really try to meet the best ambitious entrepreneur, because I think to be honest that the entrepreneurial motricity will be the key. I mean, to make things evolve in the right way. When it comes to a drastic change, I don't really count on large corporation and large groups to make such those moves. So what I notice is we are free ambassador for this new kind of entrepreneurship. And thanks for ChangeNOW to really put under the light all those initiatives. So this is how I wanted to conclude.
Thank you so much, gentlemen, for your thoughts. Best luck as you continue to invest in these great companies throughout Europe and elsewhere. So thank you for your time today.
Thank you, Trista.
Thank you.
Bye-bye.
Bye. Bye. So we're now on to our final panel, and very excited to have with us for this panel. It's a one-on-one discussion with Alain Godard from the EIF. Welcome, Alain. Alain.
Hello, good morning.
Hello. Hi, good morning. Welcome. Thank you so much for joining us today. So one of the things that of course, absolutely. One of the things I'd love to talk a little bit about today is just to give everyone, I think, a good understanding of the scale and scope of EIF. It's an incredibly unique institution, I would say, globally. I'm originally from the States. I lived many years in Europe. I'm French as well. And now I live in Tokyo, in Japan. And really, it's quite unique. I haven't seen this type of structure anywhere in the world. So could you give everybody a little bit of understanding about what you do and throughout Europe?
Yes, EIF is indeed quite a special vehicle in Europe. As you know, EIF is actually a private-public partnership that has been created now nearly 25 years ago. And the unique aspect of the EIF is to provide financing to SMEs in Europe. And for that, we use two kind of, let's say, intervention or products. One is to provide guarantees through our intermediaries. And the second is to provide capital, so equity, through investment funds. And that makes indeed EIF quite powerful, because behind, for example, in the VC market investments, we see in general, and certainly, I mean, during the crisis in 2020, EIF behind one every three startup financed by VC funds.
Wow, that's pretty impressive, because there's been quite a bit of growth, actually, as I understand, in startups throughout Europe. So you must be pretty actively investing in new funds and new financing vehicles to get money to those startups, get funding to them. And what about the impact space? I imagine that's maybe changing the landscape a little bit in terms of the types of financing that's needed, the types of funds you're seeing. How are you supporting these sectors, and what are you seeing changing?
The European impact investment market has evolved a lot over the last years, and we can see that, and we have observed it from in a way, niche market to a, let's say, more sophisticated market, composed today with professional teams, with track records and differentiating investment strategies. So this is a market that has evolved a lot over the last years indeed. So there's many repeat managers now coming into that market of impact. And I can see still, nevertheless, a quite fragmented market in Europe. Nevertheless, I mean, this is a growing market, as we have observed over the last years, about 7 years, I would say, where for the first time EIF was, let's say, supporting the first impact funds across Europe, from Croatia, Portugal to Sweden, Denmark, France, and Germany and elsewhere. So this is a market that is moving indeed very much. And I would, to some extent, compare, I mean, this growth to the VC market, I mean, that has been developed about 20 years ago, I mean, in Europe, to reach quite a mature market nowadays. So again, I see there, frankly, quite an extensive growth for the future. More and more funds are investing, I mean, these new territories. This is, I mean, the case of the fund managers that approach EF, and we have seen over the last years, indeed, more and more, let's say, funds linked to incubators, accelerators, or payment by results. I mean, you may be familiar with social bond impact investment schemes. So this is typically an area where we have been very active. You know, recently we have financed up to, I would say, more than 300 millions, I mean, in this particular segment. So what I would like, I mean, what I would wish, I mean, for the future, is actually that market is to some extent a bit demystified, because today there's still the belief that impact generation and financial performance cannot go hand in hand. And this is something that we have actually not only observed, but we have been extremely active in the market, demonstrating that actually these two can go hand in hand. And that is why EF is extremely active in these markets. And we hope that, you know, by being present, also being able to catalyze more private sector in this field, this market will grow even further.
And as I understand, I'm glad that you mentioned social bonds, because I know that EIF does equity financing, but also quite a bit of debt financing and debt structuring. Do you feel that debt could be an interesting, we had actually a panelist earlier who has a basically a micro lending platform. And I'm curious as to whether you think that that could be an important lever for those who are in the impact space, impact ideas, particularly as the time frame perhaps on seeing kind of the results of those types of businesses might be a lot longer.
Yes, I mean, indeed, I mean, the venture capital or equity, I mean, in general, is not the only instrument that could be used, I mean, for such a market. And I was mentioning in my introduction that EIF is making use of guarantee instruments. And they can be quite relevant indeed for this market, like for other intervention that we do, because we are able therefore to de-risk, you know, the financial intermediaries that for our partners, in order for them, I mean, to take more risk in still areas or markets that are relatively new and risky, which again can be seen differently, I mean, in the future, but for the time being, there's still this perception. So de-risking instruments like guarantee instruments are clearly useful. Basically, loans can also make you know, a difference in some cases, and clearly venture capital is an option. Now, I mean, you're right to say that if we look at the VC instruments, we refer here to an instrument that may be differently from other markets. Let's say, take a lot of time before creating certain value for the portfolio. And indeed, the longer exit indeed as compared to other VC portfolios. But at the same time, I'd like to say that what we have been observing over the last years is actually quite a resilient portfolio in this field, in the sense that you observe less write-off, basically, which is not uncommon for mission-driven enterprises or funders that tend to be extremely resilient, you know, over time. So indeed, it makes takes more time indeed to create value, but at the same time, I think we see there an area, a market, where the risk ultimately could be indeed lower thanks to very motivated and very, let's say, I would say, passion people in this field. So at the end, this is also something that we need to see, let's say, overall in a broader context. I mean, impact financing is an area where we cannot count only on, let's say, entrepreneurs, but we need also, I mean, to think it globally, and I think this is what ChangeNOW is about. So basically, I mean, to think about more, let's say, a different consumer attitude. Let's say public support, obviously, NGO have a clear role to play. Research, university, civil society. So overall, it's quite a movement that is taking place at the moment. And I see also a lot of, let's say, attitude that is changing on the market, not only in the area of impact, but also sustainability. We have more and more funds nowadays taking care of not only people, but also planet, as we know. And combining the two is something that we see very positively at EF going forward.
And I know one of the things, I understand that you also have a methodology for thinking about impact in the funds that you are supporting. Can you tell us a little bit about that? I think that's something that, we talked about this in the last panel, that some funds are kind of struggling with now, what's the right balance between, certainly the success of the startup, financially, and also understanding and measuring impact. What is your approach in terms of looking at funds?
Yes, what is at stake here is to introduce both financial indicators that are present in most of our VC funds, but also this second dimension, which is the impact dimension, and to make the two compatible. And indeed, we have been developing already some years ago, actually since 2013, a methodology that combines these two type of indicators. And that makes indeed our methodology quite unique, because we have been introducing and applying this methodology across all impact financing project or proposal brought to our attention. So it's quite indeed innovative from that point of view, and actually we base, let's say, even the performance, on the basis of these two indicators. So it's not only of basing our, let's say, performance or assessing the performance from the financial point of view, but also from the impact performance. And this actually has been quite successful over the last years. And I must say that personally, I believe a lot, I mean, in this methodology and beyond, because we see more and more, and not only at EF, you have seen recently many rating agencies, for example, in other businesses, bringing methodology that will assess and take into account much more sustainability or climate or impact, let's say, consideration into their own methodology. So this is not something that is going to stop. I see very much this in motion for the next years to come. And actually, I would see, and this is something that we see already, that the performance of impact or more, let's say, sustainable, broadly project provide over time a better even financial performance, taking into account, I mean, this new environment coming into place in our economy, taking again more into account people and planet.
Very interesting. And I know that you mentioned a little bit earlier about new funds coming into this space and thematic investing. I'm really curious as to, are there any sectors that you're seeing at the moment, new types of thematic funds that you're seeing in terms of their structure being different or in terms of their themes? And I know there's a lot of market forces that are kind of driving this, right? So we have regulation, we have shifting preferences amongst societies and people in societies, as well as we know that we have the climate crisis upon us. So can you talk a little bit about what you're seeing in terms of new funds that are kind of coming online now?
Yes, I mean, we see indeed, I mean, from the first fund that we have, let's say, supported in 2013, we have actually backed now about 35 fund in this market. So there's a lot coming, I mean, nowadays in this field. I would say that what I find interesting is the combination of activities that are around not only let's say we talk about before social impact bonds purely, so let's say focusing on very specific let's say performance of in the social areas, but I see more and more now combination, so more I would say holistic view from fund managers that take care not only about a specific, let's say, areas, also there's more and more specialization and thematic approach to the market in general, but also let's say combining different features of the impact, being again a combination typically of the social and the climate, for example. And the two can go very, very well together because, or the digital, when you see, for example, that in the transformation that would lead to a more digital world, more climate-friendly world, we see more and more a need to change the skills of people. And that can be very relevant, I mean, for certain I would say part of the population, and we have been, for example, at EIF very attentive to supporting skilling or reskilling, upskilling proposals, specifically, for example, in the area of women who will be the most impacted by such a revolution. So you see, this is a kind of interesting move that we see, people being much more holistic in their approach, much more, let's say, attentive again to the transformation, but also the impact on people, and that is, I think, very enthusiastic. I mean, for the future, and I believe very much in this transformation. So I don't see this, as I was saying initially, as a niche only. This is going to be, for me, more and more mainstream, and we may see what we have observed and be part of this emergence of the VC market 20 years ago. We may see more and more of this impact, not necessarily again as a niche product, but as being part of the mainstream for most of the fund managers going forward.
Very interesting. We actually have just a short period of time left, and I want to definitely give you the final word. I think, as you know, you're essentially, a very important, a large LP. What are the things that you're most excited about, I think, as an LP in the coming years that you've seen, obviously, the European ecosystem in particular change so much over the last several years. What are some of the things that you're seeing that you're most excited about?
I see, and this is why I was very happy, I mean, to join you today, because clearly what I observe and talking to many fund managers across Europe and across the world, I see more and more again these fund managers being attentive to the new challenges that we will be facing in the next years and decades, in relation to, again, to the climate change, obviously, but not only, because what is really key is to take this on a more holistic basis and to take into consideration the impact not only again on planet, but also on people. And that is something that I clearly observe now very strongly in the market, being much more thematic. And you have also seen the big fund in the world, probably the biggest, being much more attentive to thematic, to SDG or ESG component of their investment. And I think this is very exciting to see that move. I mean, from a world where attention was given essentially to performance, and I mean for good reason, also to innovation, but I see now more and more of this move towards, again, more being impactful in the interest of people and planet. And this is extremely exciting for the future.
Great word to end on. Thank you so much, Anna, for your time. And thank you, everyone, for joining us. That concludes our panel today. And we've heard some really great speakers that really have given you a good view in terms of what's coming, what they're excited about. And I hope it was a really great, informative session for everyone. Thank you, everyone, for joining.